Assalamualaikum. Today I'm going to discuss on question 3 of final exam December 2019. Alright, question 3 is basically on MFRS 108, accounting policies, changes in accounting estimates and errors. Okay, actually the question consists of two parts, okay, part A and part B. Okay, but I'm just gonna focus on part B. Okay, so for part A is basically on the theories. Okay, so I'm just gonna focus on part B. All right. Okay. So let's read the question together. As at 1st July 2018, the retained earnings balance in the books of Harvey Berhad was Rm 2,500,000. During the financial year ended 30th June 2019, the internal auditor of Harvey Berhad had identified the following situations. Okay, for number one, okay, the company acquired and recorded a machine on 1st January 2019 at a cost of Rm 300,000. However, the transportation cost of Rm 1,000 was treated as revenue expenditure. Okay, the useful life of the machine is 10 years and its scrap value is 50,000. The depreciation charge of 12,500 was already recorded for that year. Alright, so in this situation, we know that the company acquired a machine on 1st January 2019. Okay, so the machine was actually acquired during the current period. Yeah, it is during the current period. Okay, the current financial year, okay, or the current financial period ends on 30th June 2019. Okay, so that means the financial year, the current financial year of this company, okay, starts from 1st July 2018 until 30th June 2019. Okay, and the machine was acquired on 1st January 2019. So it is during the current financial year. Okay, so what happened in this situation? All right, the transportation cost of the machine was recorded as revenue expenditure. That means it was recorded as an expense in the SOPO. However, okay, the transportation cost actually can be capitalized. It should be capitalized. Okay, as a non-current asset lah. It should be capitalized. Okay, into as a machine. Okay, amounted to 1,000. Okay, it's not supposed to be treated or recorded as an expense in the SOPOL. Okay, it must be capitalized. Okay, as a machine. Alright, and then the useful life of the machine is 10 years and scrap value is 50,000. Okay, so the depreciation charge during the current period has already been recorded, amounted to 12,500. Okay, this is for the first situation. Okay, for the second situation, it was discovered that the company had overcharged a credit customer with a sales amount of 30,000 on 1st January 2018. Alright, so, alright, 1st January 2018, is it during the current financial period or is it before the current financial period? Okay, so as we all know, the current financial period is on 1st July 2018, okay, until 30th June 2019. Okay, the current financial period starts on 1st July 2018, okay, and ends on 30th June 2019. Alright, so the here, okay, the thing or the error, okay, was discovered. Alright, the sales was overcharged, okay, on 1st January 2018. So this is before the current financial period, right? Okay, so this one, okay, the overcharge of sales amount, okay, of 30,000 actually occurred before the current financial period. Okay, number 3, the company purchased a plan costing 400,000 on 1st July 2015 and depreciated the plan on a straight line basis over 10 years. Okay, starting 1st July 2018, due to heavy usage, the estimated useful life of the machine was revised to 5 years. Okay, basically this company, okay, has been used the machine for 3 years already. Right? Okay, July 2016, July 2017, and July 2018. So it has used the plant for 3 years already. Okay, and then during the beginning of the 4th year, okay, the company has revised the useful life of the machine to 5 years. And so originally the remaining useful life of the machine, okay, is 7 years. Okay, because the, the the original estimated useful life was 10 years. Okay, so supposedly the remaining useful life of the machine, of the plant, okay, is 7 years. Okay, but starting 1st July 2018, okay, the useful life of the machine was revised to 5 years. That means the remaining useful life of the machine has now become 2 years. 2 years only. All right. Okay, let's check out on the question. Okay, with reference to MFRS 108, accounting policies, changes in accounting estimates and errors, determine whether it is a change in accounting policy, a change in accounting estimate, or an error for each of the above situation. Okay, so let's check out on each situation one by one. Okay, for the first situation, okay, we know that the transportation cost of 1,000, okay, was mistreated. Okay, it was treated as an expense in the SOPOL, but it is supposed to be capitalized. Okay, it is supposed to be capitalized. Okay, so this error, okay, this we can call it an error. Okay, because it has been mistreated. Yeah, as a revenue expenditure. So this error occurred during the current financial period. So we can say that for the first situation, it is current period error, okay, or current year error. Okay, for number 2, okay, we know that the company had overcharged, okay, the sales amount, okay, on 1st January 2018. Okay, so 1st January 2018, actually before the current financial period. It is before the current financial period. Okay, so this is also an error. Okay, because the company had overcharged the credit customer with a sales amount of 30,000. This is considered as an error. So this is actually about a prior period error. Okay, because the error occurred before the current period. Okay, and for number 3, okay, this is about a change in the useful life of a non-current asset. Okay, so anything to do with depreciation. Okay, anything to do with depreciation, we have to consider it as a change in accounting estimate. All right, so this is about a change in accounting estimate. Okay, because the useful life of the plan has been reduced from 10 years to 5 years. This is about a change in accounting estimate. Okay, remember anything to do with depreciation, okay, it must be a change in accounting estimate. All right, so we are done already with question A. Okay, now let's check out question B. Ascertain whether the application of change in the above situation should be adjusted retrospectively or prospectively. Okay, so for answer for your answer in B, all right, your answer in B must be based on your answer in A actually. Okay, so this is your answer in A. Okay, this is our answer in A. Okay, the first one, as I mentioned, is about current period error. The second one is prior period error. And the third one is change in accounting estimate. So our answer for B must be based on the answer in A. Right. So since for the first situation, okay, it is current period error, so the adjustment must be prospective. Okay, it must be a prospective application or prospective adjustment. Okay, number 2, prior period error. So the adjustment must be retrospective. Alright, so the adjustment must be retrospective. Okay, for number 2, and for number 3, change in accounting estimate. Okay, so the adjustment must be prospective application. Okay, it must be a prospective application. Okay, prospective means we have to make adjustment during the current period, okay, or during the current period as well as the future period. Okay, retrospective adjustment means we have to make adjustment, okay, for the prior period. Okay, for the prior period. Okay, so in that particular case, we have to make adjustment on the opening balance of the retained earnings. Okay, opening balance of retained earning. Alright, so we cannot make adjustment on the financial statements in the prior periods, okay, because the financial statements have been published already. But the only thing we can do is to make adjustment on the opening balance of retained earnings, okay, because the balance of retained earning, okay, is to be carried forward every year. Alright. Okay, so let's check out question 3. Okay, sorry, question C. For question C, prepare the appropriate journal entries for all of the above situation for the year ended 30th June 2019. Okay, so we have to prepare the journal entries. Okay, alright, so let's check out the answer for C. Alright, this is the journal entries. Okay, as we all know, for situation 1, okay, alright, the transportation cost of 1,000 is supposed to be capitalized. Okay, so we have to record 1,000 as the machine. Alright, we have to record it as a into the machine account. We have to add it into the machine account. Alright, and then we have to cancel off, okay, the transportation costs that we have recorded in the SOPOL. Alright, so for the journal entries, we have to debit machine 1,000. Okay, so since this is a prospective adjustment, we just make adjustment during the current period. Okay, we have to do the correction of error during the current period. So during the current period, okay, we have to debit the machine account amounted to 1,000, means we have to add another 1,000 into the machine account, and then we have to credit SOPOL transportation costs. Okay, we have to cancel off, okay, the transportation cost by 1,000. That's why we have to credit, yeah, 1,000 transportation costs, right? And then we need to record the additional depreciation. Okay, since RM 1,000 has been added into the machine account, so we need to calculate the additional depreciation expense during the current period. Okay, so we have to debit SOPOL depreciation. Okay, okay, so how do we calculate the additional depreciation amount? Okay, so we know that the cost of the machine has become 301,000. Okay, originally it was 300,000 plus 1,000. Okay, the additional cost of the machine, okay, 1,000. So now the cost of the machine has become 301,000 minus the scrap value 50,000. Okay, and we have to divide it with 10 years. Okay, 10 years. Okay, so since during the current period, okay, the machine has been used or has been acquired for 6 months only. Yeah, the machine was acquired during the current period and it has been used for 6 months only. So we have to apportion it into 6 over 12 months. Okay, so this is the depreciation expense for the current period, and we have to deduct with the depreciation expense that has already been recorded. Okay, so the depreciation expense that has already been recorded, as mentioned in the question, 12,500. It has been recorded 12,500 depreciation expense for the current year, so we have to deduct. Okay, so the additional depreciation is 50. Okay, it is 50, so we have to debit SOPOL depreciation 50 and credit accumulated depreciation 50. Okay, So that's how do we prepare the journal entries for the situation 1. Alright, for situation 2, okay, we know that for situation 2 we have to do the retrospective adjustment. That means we need to make adjustment on the opening balance of the retained earnings. Okay, alright, so for the second situation, okay, we know that, okay, during the prior period, okay, the sales had been overcharged, okay, by 30,000. That means during the prior period, the prior financial year, okay, uh, the profit has been overstated. Okay, the profit has been overstated because the sales amount was overcharged. Okay, so in order to make an adjustment, we have to reduce the profit. Okay, we have to reduce the profit by 30,000. Okay, so we need to reduce the opening balance of retained earnings. Okay, so retained earning is the accumulated profits, right? Okay, so we need to reduce the retained earnings by 30,000. So if we want to reduce the retained earning, we have to debit the retained earnings, okay, by 30,000. Okay, so we can write here sales overcharge 30,000, and we have to credit account receivable 30,000. Okay, so for situation number 2, okay, we had also overcharged the credit customer. We had overcharged the account receivable as well. Okay, that's why we need to credit the account receivable by 30,000. All right. So we can adjust account receivable account. Okay, we can adjust the accounts receivable because the account receivable, okay, has a balance that can be carried forward every year. Okay, the balance of account receivable can be carried forward every year. All right. That's why we can adjust the account receivable by 30,000. Okay, so we cannot adjust the SOPO during the prior period because the financial statement during the prior period has already been published. Okay, the only thing that we can do is to adjust the opening balance of the retained earning during the current period. All right, so we need to adjust the opening balance of the retained earning during the current period. Okay, so any adjustment relating to expenses or revenues, okay, during the prior period, okay, we need to make adjustment on the opening balance of the retained earning, okay, of the current period. Okay, so here we have to adjust, okay, the revenues or the sales overcharge, okay, in the retained earning, on the retained earning. We have to reduce the retained earning by 30,000 because the revenue during the prior period had been overcharged. Okay, so we have to reduce the retained earning, okay, by debiting the retained earning account by 30,000, and we have to credit the account receivable as well. Okay, and for situation number 3, okay, for situation number 3, we know that it is a prospective adjustment. Okay, it is a prospective adjustment. So we need to actually calculate the new depreciation expense for the current period. Okay, so for calculating the new depreciation expense, first we have to find out the carrying value, okay, of the plant on 1st July 2018, okay, because the revision was made on 1st July 2018. So we need to find the carrying value of the plant on 1st July 2018. Okay, so from this situation we know that the plant has been acquired for 3 years already. Okay, so the remaining useful life, okay, the new remaining useful life of the plant must be 2 years. Okay, the remaining useful life is only 2 years. Alright, so we need to find the new depreciation expense. Okay, okay, how do we calculate the new depreciation expense for the current period? Okay, we take the carrying value. Carrying value is cost less accumulated depreciation. Okay, so the cost of the plan is 400,000 minus the accumulated depreciation of the plan for 3 years. Okay, we know that the cost of the plan is 400,000, so we just divide by 10 years. Okay, because there's no scrap value. So the annual depreciation expense is 40,000. Okay, 40,000 times 3 years, okay, we get 120,000. Okay, the accumulated depreciation is 40,000 times 3. Times 3 years, so we get 120,000. So the carrying value is 400,000 minus 120,000. Okay, divided by 2 years. Okay, because the remaining useful life now has become 2 years. Alright, so we have to debit SOPO depreciation 140,000 and credit accumulated depreciation 140,000. Okay, so that's how you prepare the journal entry for the third situation. Okay, for prospective adjustment, it's just like you record the depreciation expense as usual. Yeah, you have to make the adjustment. You have to record the new depreciation expense during the current period only, and also during the future period. Okay. Alright, so next we look at question D. Okay, calculate the restated opening balance of retained earning as at 1st July 2018. Alright, so as we all know, the opening balance of the retained earning, okay, is given here. Okay, in the question, it is 2,500,000. Okay, this is the given opening balance of retained earning. Okay, 2,500,000. So we have to calculate the restated balance. Okay, so to calculate the restated balance, we have to check out on the journal entries. Okay, do we make any adjustment on the retained earnings? Okay, from the journal entries? Yes. For situation number 2, okay, we have debited the retained earnings by 30,000. Okay, debit retained earnings means we have to deduct. We have to deduct retained earning by 30,000. Okay, so if uh, there is a debit, there is a debit entry for retained earning means we have to deduct. If we credit means we have to add. Okay, so here we debit the retained earning means we have to minus the retained earning by 30,000. Okay, so let's check out the answer for D. Okay, this is the restated retained earning as at 1st July 2018. So this is the balance given in the question, 2,500,000, and we have to minus the sales overcharge, or we have to minus the prior year error. Okay, prior period error, 30,000. Okay, so the restated balance of retained earning is 2,470,000. Okay, so if the retained earning is was credited, okay, we have to add. Okay, we have to add. Okay, if it was debited, okay, if the retained earning was debited like this, okay, we have to deduct the amount. Okay, so here we have to deduct 30,000. All right, so this is how you calculate the restated retained earnings. Okay, that's all for the discussion. Thank you very much. Assalamualaikum.